station of TFNN. The Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the September 9th terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the newsletter service that is the intelligence for creating financial freedom. I hope everyone out there had a magnificent and magical and marvelous Monday. I know I did. Let's make sure that you and I, that we do all that we can do to have one heck of a terrific Tuesday. I know for the next 2 hours, I'll do all that I can do and share with you extraordinary tools that help us identify where price is headed to. That includes that lightning bolt pattern, that A to B equals CD. We'll look at Fibonacci expansions and contractions. Of course, the two of those combined are what create those Gartley and butterfly patterns. We'll look at the Japanese candlesticks, the messages that the bulls and bears leave for you and I each and every trading session. We'll look at Chapman wave peaks. We'll take a look at TAS market profiles. We'll look at the different floors that are being made inside the market. We'll look at anything we can. Of course, if you've got some ideas that you'd like to share with us, just give me a call at 877-927-6648. Love to hear from you. Love to hear your ideas, and I'm happy to help you identify where things might be going and something that you're looking at trading out there. Of course, internationally, you can give us a call. Where's that international number? 727-445-1044. And hey, let us remember this. Let us remember this. Perhaps the most important thing in life is to remember that everything in life happens for us, not to us. Hey, it is Terrific Tuesday. This is Steve Rhodes. This is TFNN, and welcome to the show. Right now, we've got Dow futures. They're trading up 37 points, trading at 17,063. S&P futures off 4 1/4. They're trading out at 1996. NASDAQ down about 3 points, traded 4,090. Russell 2,000 off a bit. King dollar on the move again today, up 164. Ticks up 16 pennies, trading out at 84.40. So we've got some movement inside the currency market. How about inside the hard currency market? Nah, not much going on there. You got gold up $1.70, silver up 6 pennies, light sweet crude on the other hand, Texas tea up 80 cents. That's up about 0.8%. Natural gas, that is truly on the move this morning, up 3% as we speak right now. A quick peek across the globe out here. Let's go take a look at what we've got going on over in Europa. We've got the DAX trading out 43 points, the FTSE off 3. In Asia last night, a bit of a mixed bag out there. You had the Nikkei up 44, the Hang Seng down 49, and a flat market in the Shanghai. So where do we begin our day? Where do we begin our day? Let's go see what's going on internationally. Let's do that. Let's go see what's going on inside the DAX and inside the FTSE. Now, one of the things that I pointed out yesterday was just simply the retracement that the DAX had made from high to low. Now, the retracement that we're looking at out here, if you're watching us on TigerTV, and hopefully you are because we've got that new and improved look out here, our charts are looking much clearer each and every day, and that is a beautiful thing. If you take a look at the high we're looking at is the July 4th high, down to the low that was put in on August the 8th. What we'll notice is that the DAX has made the 0.786 retracement. The actual number would have been 97.89. What it actually got up to yesterday was 97.73. Close enough for our work. Now, candle formation out here, this actually is a reversal candle, or set of candles. These 3 candles out here, this is what's referred to as an evening star. If the DAX were to close right around this level where it's at right now, 97.10, you'd have a reversal signal at an area where an A to B equals CD pattern can begin forming out here. And that's what's going on inside of the DAX. If we take a look at the FTSE out here, what we're going to find out about the FTSE, I believe we covered this yesterday, but if I didn't, let me make sure that I cover it right now. You know, the FTSE is struggling to break out over its highs. It has been struggling. These are the highs, folks, that go back to January of 2014. It's the blue horizontal line going across my screen. It's priced out at about 68, 67 out there. Very significant area of resistance. We want to watch the FTSE because if we see a convincing close above that, this market here is going to break out. In fact, its consolidation level, you'd give it the area, the conservative side of the consolidation, the lows right around the 64.92. So it's a good 400 point, 380 point move in either direction. But what we do know here about the FTSE is that it is struggling to to break out of that trading range that it has been contained within. If we go take a look at the ES Mini, the S&P futures are down about 3.5 points as we speak right now on the daily chart. Not much in the way of damage out here. Of course, what the ES Mini has been doing, all of these narrow-bodied candles out here, it is telling us that the market is tired. Now, it's doing that. It's struggling as it's made its 1.272 expansion. You say, what the heck is that? 1.272 is a Fibonacci summation number that we like to use out here. And we take a look at expansions of swing points. The swing points being the little doji high from July 24th down to the low that was put in on August the 8th. You'll see that 1.272 expansion, 2011.73. Can't really get to 2011.73, but at 2011.75 it could get to. And what was the actual high? 2011, even Steven out there, and that was on September the 3rd. So the ES Mini struggling. Now, any kind of retracement that we would see inside the ES Mini, first of all, a dead cat bounce. If we take a look at it, if we go from low to high, the August 7th or August 8th low, actually August 8th low, to that high at 2011, moving back to 1964 would be nothing. That would just be a normal move. That wouldn't even be a normal move. That would be a below normal move. A normal move would take you back to the 1936 level. So we know that the S&P futures are struggling to break out, just as the FTSE is struggling to break out. However, the FTSE's got other issues that it has to contend with, and here it's just really an expansion. If, in fact, we did see a break above 2011, then the next area where price would move up to would be the 1.618 expansion. I think I've got that tool for some reason turned off to the upside. Let me give that to you here. Give me a moment to just go punch that back in here. Where is my retracement expansions? No, it says that it's on. Well, interesting. I'm not going to spend time taking a look at it. Something is going wrong. Now, let's go take a look. So that's the ES Mini. That's what's going on inside the S&P futures. If we go take a look at what's going on inside the NASDAQ futures as we speak right now, NASDAQ futures trading off about 3 7/10% out here. You know, the NASDAQ is the strong indice out here. And are we seeing any kind of reversal signals out here? Absolutely. There's a big key reversal signal out here inside of the NASDAQ, and that's the trading session here from September the 3rd. If we take a look at that, high out there, 441.1375. That's really the key number. Any significant move above that, the NASDAQ will move on to higher price. NASDAQ's been making higher highs. It's been doing it with less relative strength out there. But nonetheless, it still hasn't really broken down. It has given us a signal of where the bears are camped out. Of course, the primary bear inside this, inside the NQ, inside the September 3rd sell-off was really the result of Apple. Apple going to be coming out today with an announcement. I believe that's about 1 p.m. Eastern Standard Time, somewhere right around. It closed at 98.36. Right now, it is, I'd like to tell you what it's trading at, but I think I just lost you. That's not good. Oh, bummer. I just lost something. I don't know. Al, I can't hear anything. Give me a signal. Okay, on there. All right, great. All right, good. So I think I've just lost some things inside the den or what have you. So I'll go ahead and get that restarted out here just for a moment. There we go. And just there were different things going on in my ears. Just somebody testing me out here. All right, if we take a look at Apple. Apple closed at 98.36 and trade out at 99.06. Well, the big culprit in that September 3rd move inside of the NASDAQ out here was Apple, down with significant volume. So Apple's got its own hurdle of itself. You've got big sellers that are just out here ready to pull the trigger right at the price level of its highs at that 103.74. So volume off of the highs inside of Apple. We'll see if it can overtake that. If it can, that'll be one heck of a move. That means getting above the 103.74. What we know about Apple as we speak right now is this has volume off of its highs out there. That is never a good thing. So where is it that Apple could trade to on any kind of pullback? Well, you just simply have to go back to its last breakout. And inside of Apple, that would take you all the way back into the trading session of April 23rd to April 24th. That price range anywhere from 80.10 to about the high of 75.88. So we'll see what they've got out here. Now, when Apple came out with that iPhone 5, I suggested, if you were a listener to, and I might have been doing Tom's show at that time, when everybody was talking about the thumbprint piece of it, and my suggestion then was what Apple ought to do, just like they did inside the music business, where they really changed the whole industry out there, they ought to do the same kind of thing inside the what business? Inside the financial markets, inside the credit card business out there. However, the difference between what I believe it is they're going to announce versus what I was suggesting at that time was that they would become a new credit card company, and that's what they would do with all those billions of dollars. That would change the dynamics of the company big time. You take a look at the stock charts of American Express, of Visa, of MasterCard. We'll be right back, folks.
Look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. It is always better when we're together. I mentioned as we were taking a look at the markets coming into the opening of the show, natural gas was on the move up 3% out here. Now, yeah, natural gas yesterday giving us some additional signs here of the bulls down here at the bottom. Nice big, it's a bullish engulfing candle. Looks like a key reversal session, but key reversal sessions need really three things. You need the market, number one, to be in extended condition. And I can't really say that the move down that we've seen inside of natural gas here over the last 4 days, that at all was in an extended condition. So that disqualifies it as a key reversal bar out there. But it was a bullish engulfing. Now, the other two things that you need inside a key reversal session, you need the prior day's high and low to be exceeded, and then you just simply need to close in the opposite direction. So those two elements qualified yesterday. What we did have was we had a big old bullish engulfing candle. This is a continuous contract, by the way, that we're taking a look at. It engulfed the prior 2 days sessions. You're now seeing some follow through to the upside out here. Along the bottom, you've got other bullish signals out here. You've got this little morning star pattern. That's a 3-candle, or it could be more than 3 candles. In this case, it was a 3-candle session. That's the August 15th, August 18th, and August 19th sessions out there. Another morning star pattern out here, and that was during July 22nd, July 23rd, July 24th. So significant support inside natural gas here at these lows. If those give way, then all holy heck could break loose out there. But you've got some bullish moves. If we go ahead and take a look at some things that are moving in the pre-market out here as we speak, moving to the upside, you've got Mobileye NV, that is been on fire. It's closed at 53.01, and it looks like I'm having trouble pulling up that symbol. Not the thing you like to see out here. Let's go you got Threshold Pharmaceuticals. Let's see if I can pull that up. There we go. Threshold Pharmaceuticals. Now, that was a rocket ship yesterday. It closed at 461. Right now, it's trading at 535. Look, yesterday morning when this equity opened up, it was priced out at about $4, and, it opened at $4.12. Let's pull this thing back. I don't know what they are curing out here, but the stock is absolutely on fire. Big, wide-ranging bar, accelerated volume yesterday. A to B equals CD. Well, that's not a problem for this, but let's go take a look at those patterns out there. The A point being the low here of May the 16th, the B point being up here on the high on June the 11th. The C point is all the way back here on June 27th. So it's I said it was trading at about 501, 502. At 502, that's your 1 to 1.272 A to B equals CD. This one's higher price than that. There actually is a little breakout, not a high volume high. Let me pull this back a little bit further. Maybe it is on a weekly chart. Let's put this on a weekly time frame. Get a feel for where this little puppy may be headed to. Let's see here. Well, how about this? So talk about something that was actually coming back into, now this is pretty interesting. So if we were wondering why that $4 area held as support, let's put the line across our screen out here. This equity, and remember, when things break out, you've got a couple different areas that you're measuring for a breakout. This thing broke out. This is a weekly chart we're looking at on February 20th, 2012. Volume to the upside, 56 million shares. This thing has pulled back into that level with light volume, big time light volume. It actually got a little bit below the gap during the week of May 5th, May 12th, May 26th. Got back inside that mode and just simply, a lot of of buying that was going on down here at these lows. So this equity ought to be able to make a run for its highs. Now, there was some selling, although, and the volume out here, the little supply line that it does have, we take a look at that. The supply line that it's got to deal with is this candle session from the week of September the 17th. So at about 587, you could start running into some real supply, some real sellers out there, because there are folks that are in this between that 805 and 587 mark that have not appreciated the fact that this equity pulled all the way back to $3.51, and those folks may want to get their cash. So that next real level here to be watching inside of this equity, again, ticker symbol THLD, threshold pharmaceuticals, probably 587. That has been significant resistance in the past out there. Also on the move this morning, let's see, to the downside, you've got Pinnacle Foods. PF is the ticker symbol. They closed at $33. They're trading down $1 at $32. It's going to trade back into its sign of strength out here. Looks like it is, and that has held. I expect the level of 30.53 to hold as support for Pinnacle Foods. 877-927-6648. Steve Rhodes will be right back.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow off 61 points, straight out of 17,050. S&P down 5, traded 1996. Composite up 10 points, trade at 45.82. Let's go out to our currency trader. Let's go to Lou in Nashua. Lou, thanks for calling. Thanks for holding. How you doing this morning?
Hello?
Lou, yeah, hi, Lou.
Yeah.
How are you? How are you?
Fine, thank you. What do you see in the euro?
Are you in a trade at this moment, or?
I just got short at 29.
Okay. All right.
129.
All right. So let's take a look at the euro here. Let's take a look at it on a couple of different time frames out here. First I'm going to do is put up the weekly chart for the euro. It's trading off lower this morning. So you got the euro trading lower. You got the yen moving higher. That's what's putting the strength inside the U.S. dollar index out here. So let's take a look at the euro. It continues to get walloped. The euro likely is going to find some pretty significant support, Lou, very shortly here. Now, the reason that I say that is I'm going to put a line across my screen out here, and I'm going to use I was going to try to put a line across my screen. I'm going to try that one more time out here. I'm going to use both the bodies of the candle and the wicks out here. And so at 1.2819, between 1.2819 and 1.27516. What we have taking place here is a couple of different things. It is a weekly chart that I'm looking at. First, you have an area where bulls have defended this area in the past, and it's a weekly time frame that we're looking at. So those weekly time frame and trends, they have a lot of meaning. By bulls, what I mean here is the week where we saw the euro move down back in March of 2013. It was at this price level, and we saw a nice big bullish engulfing candle that formed out here the week ended April 1st, 2013. So that was the first time that we saw some significant bullish activity around these levels. We saw it take place also the week of May 20th, because the euro just kind of moved higher, moved back to test that area, and we saw a little piercing candle that got some follow through on May 27th. Makes a higher move from a weekly basis, come back and test this area one more time, creates a bullish engulfing candle, and that was the weekend of July 8th. So in this range out here, my expectation would be that, in fact, and even just a little bit lower, if I go a little bit further back on the charts out here, that would be to the time frame in November of 2012. I'll put that line across the screen out here. That price point, Lou, is around the 1.26619. You got a morning star pattern. That's also a bullish area. So likely, and we're also, what the euro would be doing in this range here is making a 100% move of a move. Oftentimes, that's the extent of a move out there. So I would say that the euro should be finding its legs soon at around those price levels out there. And that's how I would, if I go take a look at a monthly chart, let me see if there's anything on a monthly chart out here. Because we know the daily chart is just, it's miserable. It's falling apart. So what we want to do, Lou, is we want to go see here are there any significant areas of support inside of the euro. And on the monthly chart, interestingly enough, it also had a nice big bullish engulfing session the month ended April in 2013 out here. So I would have to say you might find some real, I would say put on your seatbelts. Make sure you're using some tight stops inside the euro. Probably something above 1.30966 starts to tell you you're on the wrong side of the move. out there, that could be too much pain, though. Use some stops out here on a daily basis. As I flip back, I don't see any kind of reversal signal just yet, so lower price should be anticipated out here. But I would expect the areas that we tried to identify, 1.2819, to probably be an area where you start to see, you want to maybe even start considering, if we see some support there, even the other side of the trade.
I see. Okay. Thank you.
Now, it doesn't mean that those areas have to hold. That's why, I just simply want you to be in here using some stops. But if you start to see it, it's the message of the markets from before that gave us an idea as to where buyers of the euro are hanging out.
Okay, great.
All righty?
Yep, thank you.
You bet. Thanks for calling. Thanks
Bye-bye.
for listening. That was Lou in Nashua, and that was taking a look at the euro. As long as we're in the currency market out here, well, first let's go check in on King Dollar, up us 164 ticks out here. I don't think we took a look at King Dollar earlier. No, I know we didn't. Now let me switch over to the continuous contract out here. That way we can go see exactly what the U.S. dollar index. So we took a look at the euro, right? Running into what looks like some significant support out here. If we take a look at the continuous contract here for the U.S. dollar index, we're going to find the same thing is taking place out here. Now, that same thing, meaning that we're seeing a 100% move of a move. And if we take a look at the actual swing point from a daily basis, we're looking at the swing point of July 9, 2013. The low of that swing is 84.31. The high is 84.96. We're trading right now at 84.04. So this is the area here where we ought to start to see. Now, that doesn't mean we don't go up to 84.96 out here. I just said we're in the range. We're in the area where we ought to see some turbulence inside of the U.S. dollar index. Probably, most likely, the euro goes down and hits those support levels that we identified. And because of the weighting structure of the euro inside the U.S. dollar index, we likely see it move up to this 84.96 range out there, completing a 100% move of a move inside of that. If we go take a look at the Japanese yen, what do we know about the Japanese yen? Well, what we know is that broke a trend line as it has done in the past, and that was the signal that it wanted higher price, that it wanted to get weaker out there. And that's exactly what it's doing. If we take a look at where is this likely to head to, really a couple different patterns out here. First, let's take a look at the A to B equals CD pattern. What I'm going to use for my A point out here, I'm just going to come down and take a look at this candle session from August the 8th. But that's going to be our A point. The B point's going to be the high out here on August 25th, and the C point, a shallow retracement down into the August 28th level. 1 to 1 A to B equals CD. It's nearly completed that. 106.51 is the number out here. What it's gotten up to so far is 106.39. Do I think it'll go higher than 106.51? Yeah, I do. I think it's more likely 107.31 would be its next stop out here. Let me put this on a weekly time frame and get a feel for what it might be doing. And then we can also take a look at so there's the trends that it has broken. So on a weekly time frame out here, and let me pull it back even further. I want to just take a look at expansions of swing points. So as we take a look at the expansion of swing points, whoops, didn't grab there. There we go. If we take a look at the expansions on the weekly/daily time frame, which is the same set of swing points in essence that we were looking at, 106.71 is a target. You'd have to say, if it gets above 106.71, pretty good chance you're looking at 108.33, and that is on the Japanese yen. Let's go take a look at the Great British Pound out here. Great British Pound trading up just slightly today. Let me put this on a daily time frame, see if there's any kind. Now, the weekly chart out here, as long as I've got the weekly up on my screen, this is suggesting to me that we're likely to see move down to about 157.42. That's the 0.618 retracement off of the low out here from July the 8th to the high that was put in on June 30th. Again, those are weekly dates that I gave you. Let's look at the daily charts out here and see if there's any. There's no sign here of a reversal as we speak just yet. Yeah, it's trading up just a tad, but this is just a pause button as you might have on a VCR. Of course, nobody has VCRs anymore these days, and I don't even know. Well, you probably use pause buttons, maybe just on your television set or what have you. And that's called a bullish harami, and that candle should just kind of be trashed. It has no meaning other than, okay, it's just a pause in the marketplace. Now let's take a look at some things out here that are popping and dropping. Let's go take a look at the Annie's is a buyout out there, so let's not look at that. Let's go take a look at Netflix. Netflix up $6 and change out here, up 1%. Netflix today getting above its market profile high out here. Now, I believe in Netflix we had a confirmed A to B equals CD to the upside. Did we have that out here? Give me a moment. We're going to take a look. Well, let's go see so let's refresh our memory here on what Netflix has done. Number one, it's taken out a swing point that was back on March the 6th at 1.6 million shares. That was taken out with volume 5.4 million shares. So you had a break above that swing point. Makes an A to B equals CD down pattern that took us into the candle session on August the 1st out there. Now it may be making an A to B equals CD to the upside. And we'll find out today if we see a close above 485.30 with more than 1.9 million shares. So far today, we've done 647, so it's going to have the volume. It's going to have the juice behind it. What you would see is Netflix trying to make a run for its A to B equals CD. And boy, it'd be a large one, too. It would actually give you a price projection in the 543, 563 level. Let's take a look at the weekly chart out here. Let me see if there's some weekly candlestick reversal signals or any other kind of significant resistance that we have to, this has to be concerned with. Hey, weekly is on bullish mode here. If we take a look at its market profiles, volume-wise of the swing here from June 30th was 11 million shares. Moved in there with 8 million shares. Okay, light the week of August 18th. It's been light on volume. It would behoove itself to get above the area where it's traded. To have 11 million shares or more this week, and we're only into the beginning of Tuesday, right? And so far this week, it's done about 2 million shares. So it's got enough time to do that. That's what's going on inside of Netflix. You got Hanes Celestial Group out here, HAIN. That's up 3%, up $3, probably as a result of Annie's being bought out there. They probably have a target on their head being in the health food industry. Let's go see what Hanes is doing. HAIN is the ticker symbol. On a weekly basis, let's see here. It's up and over its most recent swing point. Let's see if it is with volume. That is January 20th. That had 3.1 million shares out there. This week so far, 534,000 shares. This was price was moving into that swing point the weekend of August 25th, 2.7 million. Yeah, it wasn't 3.2 million, but nonetheless it was moving up with volume because it had 7.6 million the weekend of August the 18th out here. So Hanes Celestial could be forming a very large A to B equals CD pattern to the upside. That's the weekly that we were looking at. Let's go take a look at the daily out here. The daily chart, so you got a gap up, boy, a sign of strength inside of this equity on August the 20th. That's where all that volume came from. There were 3.9 million shares out there. Nonetheless, its swing point on a daily basis, 413,000 shares from August 29th. You're up and above that level with already 200,000 shares. Hanes Celestial on its way up to a new celestial place in the sky. Hey, speaking of celestial aspects out here, it's a full moon Tuesday out here. Interesting that the market is moving lower into a full moon. We're certainly going to have to monitor that. Because oftentimes these full moons can actually be reversal points out there. So that is something that we're going to have to pay attention to. Also moving, we got United Therapeutics. UTHR is the ticker symbol. That's trading up about 2.5%, up $3. Whew. Take a look at this little rocket ship out here. Boy, this would be nice if we could pull back into its breakout area. But that's a wide-ranging bar, huge wide-ranging bar. We're talking about from $90.40 up to $118, and with what? With volume out there. The swing point, for those that are holders of UTHR, luckily for you, the swing point is actually the following day. That doesn't have much in the way of volume, 1.5 million shares. You're moving up into it today so far with 173,000 shares. Let's pull this back, see if there's really any trouble. No trouble in sight for this equity. Let's put this on a weekly time frame. No trouble that I can see at the moment. Is it making a double top? It has the potential of doing that on a weekly basis out here. Let's go take a look at that. This equity did back on the week ended December 23rd, 2013 at the 116.65 level. That did make a high. You got above it the week ended August 25th. You pulled back a little bit last week. You're back above this area. Pretty good chance that that this is not going to act as resistance. That is United Therapeutics Corp out there. To the downside, we've got Leidos Holdings out there. I don't know if that's how you pronounce it. LDOS. I was thinking of that Boz Scaggs tune out there. How many of you are Boz Scaggs fans out there? In any event, if we take a look at Lidos, the weekly chart, that's not looking good. It's taking out a swing point low, trading just below it. That is the week ended March 24, 10 million shares. It's light on the volume down there, but let's go take a look at the daily chart out here. I saw Boz Scaggs probably within the past year or so. It was a good show. It was absolutely a good show out there. If we take a look at what Lidos or Lidos Corp Holdings is doing, here's the daily chart that we're looking at. Big, you can see here. Let me go ahead and turn a couple indicators off on the chart out here. Let me do that. Give me uno momento to do that out here. And what you're going to see is that this thing broke down and price just simply moved back into that area. That's why you want to go ahead and mark these spots on your charts out here. We take a look at the breakdown areas for this equity, and it was a big breakdown. This had on March 27th, 4.8 million shares to the downside. Price just simply came back up into that area. That was on June 6th. Never touched 41.30. Gave you a reversal signal. Gave you a bearish engulfing candle on June the 9th out here. This thing has got some much lower price. I'll have to put it on a monthly chart. I'll take a look at it while we're on the break. See if I give you a target for Lidos Holdings. We'll be right back, folks.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Waves. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Absolutely always is better when we're together. Thanks so much for joining us here at TFNN, folks. Right now, we got the Dow trading off 79 points. The S&P is down about 7. NASDAQ Composite off 14. Russell down 7 points. NDX 100 off 9. New York Stock Exchange down 40 now. We also have the VIX Index well above the, it's above the 50-day exponential moving average. We'll see if it can hold that line here today. Right now, it's trading out at 1302. I believe 1273 is the number to be watching inside of the VIX. If we take a look at the summation indexes out here for 3 of our indices, if we take a look at the New York Stock Exchange out here, well, that thing, and we pointed that out yesterday, had again dipped it. How about that? It dipped below the zero line out here. Of course, we had signals that the patterns that existed in the past were likely going to result in the same thing. What I mean by that is we were seeing prices move higher inside the New York Stock Exchange with a declining price oscillator out there. In the past, when we see that, we have seen retracements take place. Now, the question is going to be just how deep of a retracement can that be out here? Well, if we take a look at the New York Stock Exchange, so far, damage has been very light out here. If you take a look at the swing from August 7th to the high that was put in here, a test of the highs, or its most recent highs from July 3rd, the dead cat bounce takes you to a price point of $10,897. That's really the likely next stop. Your $10,966 out here wouldn't be out of the question to get down to 10,768. That would be the bottom of its descending price channel, or its rising price channel, I should say, out here inside of the New York Stock Exchange. But what's interesting as we speak right now, look, we're early into the trading session, and so anything can happen. But this is also the first day that we are seeing the composite, the NASDAQ composite, its price oscillator now dip below the zero line out here. And maybe you can see just this little red dot on my screen out here in the second window of my chart. That's the summation index for the NASDAQ composite out here. It's an important trending tool for us to focus on. You can see here when the line turns red. I probably ought to turn that, make that a little bit larger for you. Why don't I do that, even though you guys are now seeing this in HD? Let me see if I can do that out here. Of course I can do it. Let me see. If I just change that to 3, how does that look? Okay, that's a little bit better. Okay, so we'll change that to 3, and let me see, can I do that down here as well? How about that? Okay, that sort of worked. I'll just close it up here. So now we're looking at the NASDAQ composite, and you can see here when the trend here changes, you see a move lower. Or you could also see certainly a consolidation, which is what we saw inside of the NASDAQ composite. Now, inside of the composite, remember, this was, if you're looking at watching us on Tiger TV, we had a 165-point consolidation. It gave a price projection of 46.50. The actual high that we have seen here so far is 46.10. Pretty close, 40 points away from that level. So one of two things could be taking place out here on any kind of a pullback. Remember, it's the composite we took a look at that gave us the biggest trouble signal out here, which was that key reversal bearish engulfing session that was from September the 3rd out here. So pulling back into the 44.85 would not be out of the question out there, and that's the test the consolidation box, which it did not do. If we take a look at the Dow out here, the Dow today also for the first time now, ever since the August lows out here, the price oscillator dipping below the zero line, just barely, but dipping below that. Folks, if you're off to start your day, have a terrific Tuesday, and thanks again so much for joining us. If you're staying tuned, thank you for doing that. We're going to go take a look at charts in the indices and look at all of the floors that they have built. We're going to take a look at some weekly, some daily, some monthly primary trading range boundary lines. This is Steve Rhodes at TFNN. Have a great Tuesday, folks. Look forward to talking to you soon.
Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.